Palantir has always been known for its government contracts, but something big is happening. The company is making a major push into the commercial sector, and the partnerships it's signing right now could completely change its future. If you've been wondering whether Palantir can move beyond just government deals and become a true AI powerhouse, this is the video you need to watch. Because while a lot of people are focused on Palantir's stock price, what really matters is whether the business itself is growing. And what we're seeing now, from deals with major corporations to a surprising new partnership that could reshape its entire AI strategy, might just be the most important development in Palantir's history. And here's the thing. There's a reason Palantir is landing these deals right now. A shift is happening in the AI industry, and companies that don't move fast enough are going to get left behind. Palantir is making its move, and the question is, will this be the catalyst that takes the stock to the next level? There's one partnership in particular that almost no one is talking about, but it could completely change the game for Palantir, and not just in the way you think. We'll break that down later in the video, but before we get to that, let's start with the foundation: Palantir's rapid expansion into commercial partnerships and what it means for the stock. Before we get into the details, make sure to hit that like button if you find these deep dives valuable. Subscribe to the channel so you don't miss future updates, and turn on notifications so you're always ahead of the market. For years, Palantir went primarily for government and military contracts, working with agencies like the Department of Defense, the CIA, and law enforcement. That's what built its reputation, and for a long time, that's where most of its revenue came from. But now, Palantir is rapidly expanding into the commercial space, and the deals it's signing prove it. Let's start with Walgreens. One of the biggest pharmacy chains in the US, Walgreens is now using Palantir's AI-driven platform to optimize its supply chain and improve inventory management. If you've ever walked into a Walgreens looking for a product only to find empty shelves, this deal is Palantir's way of solving that problem. Then there's Heineken. Yep, one of the largest beer companies in the world is now using Palantir's AI solutions to track production, distribution, and inventory management. Think about that for a second. One of the most well-known consumer brands is trusting Palantir to handle one of the most crucial parts of its business. And it's not just big names. RaceTrac and Ripcord are also now working with Palantir, showing that the company is not just signing government contracts, it's actively building out its presence in industries that have nothing to do with defense. Here's why this matters. Palantir's biggest criticism has always been that it's too reliant on government contracts, that its revenue is too tied to government spending, and that it doesn't have the ability to scale into the private sector like other AI companies. But these deals prove that's changing. Now, a lot of AI companies are competing for enterprise deals, but the fact that Palantir is landing partnerships with household names like Walgreens and Heineken says a lot about how its AI platform is being perceived in the business world. And that's where things get even more interesting, because one partnership in particular is much bigger than people realize. Palantir's collaboration with Databricks isn't just another deal. It could be the single most important move the company has made in years. We're going to break that down next, and trust me, this one changes everything. Palantir's partnership with Databricks is not just another enterprise deal. It could be the single most important move the company has made in years. If you're not familiar with Databricks, here's what you need to know. 1. It's backed by NVIDIA. And if you know anything about AI, you know that NVIDIA is the king of the space right now. They're the company fueling the AI revolution. And the fact that Databricks has their backing means it's a serious player in enterprise AI and data analytics. 2. Databricks specializes in AI-driven data processing. They help companies analyze massive data sets and build AI-powered applications, which perfectly aligns with what Palantir does. 3. Palantir and Databricks were seen as competitors. That's why this partnership is so important. Instead of competing, they're teaming up. And that tells us something big. It means they see more value in working together than in going head-to-head, and that's a massive strategic move. So what does this deal actually mean? For one, it integrates Palantir's AI platform, AIP, with Databricks' data intelligence platform, making it easier for enterprise customers to use both technologies together. This is big because a lot of companies were previously forced to choose one or the other. Now they don't have to. This partnership removes a major barrier for adoption, meaning that companies already using Databricks for AI and data warehousing can now integrate Palantir's solutions seamlessly. But here's where it gets really interesting. Palantir and Databricks both have massive government contracts, especially with the Department of Defense. Now that they're working together, they could be in a position to secure even bigger government contracts and dominate the AI-driven defense space. And it's not just about defense. Industries like finance, healthcare, and manufacturing are also heavy users of AI-powered data processing, and now they have a direct way to use both Palantir and Databricks within their systems. This partnership is also a direct signal to the market that Palantir is playing to win in enterprise AI. It's not just about government contracts anymore. It's about being a critical piece of AI infrastructure for companies worldwide. But there's something else happening here that a lot of people aren't paying attention to. The AI industry is evolving fast. Right now, AI companies are in a land grab for enterprise adoption. The ones that integrate the fastest, form the best partnerships, and make their platforms as accessible as possible will be the ones that survive long term. And that's exactly what Palantir is doing. We're seeing Palantir transition from a niche AI player to a must-have enterprise solution. And if that continues, it could completely change how investors see this company. That brings us to the biggest question. Will this be enough to push the stock higher? We'll break that down next, because while Palantir's AI expansion is promising, it all comes down to how fast they can turn these deals into revenue growth. So far, we've broken down Palantir's growing list of enterprise partnerships and why the Databricks deal is bigger than most people realize. But here's the real question. Will all of this actually translate into long-term stock growth? Because at the end of the day, partnerships are great, but investors want to see revenue growth, profitability, and proof that Palantir can dominate AI. And that's where we need to take a step back and look at the bigger picture, the AI industry as a whole, and how Palantir fits into it. Let's start with this. AI adoption is accelerating faster than anyone expected. According to Wedbush analyst Dan Ives, Big Tech is on track to pour $2 trillion into AI infrastructure by the end of 2025. That's an absolutely massive amount of money, and it tells us one thing. AI isn't just another tech trend, it's a full-blown transformation across industries. And this is where Palantir is positioning itself differently from most AI companies. A lot of AI stocks, especially smaller ones, are focused on developing AI models or selling AI-powered software solutions. But Palantir isn't just selling AI software, it's selling AI integration. Its platform doesn't just generate AI insights, it helps businesses and governments actually apply those insights to their operations. And this is important because AI adoption isn't just about having access to data, it's about knowing what to do with it. That's why Palantir's artificial intelligence platform, AIP, is such a key part of this story. Companies are flooded with data, but most of them don't have the tools to translate that data into real decision-making. That's exactly what Palantir specializes in, helping organizations turn AI models into practical, revenue-generating applications. And this isn't just theoretical. We're already seeing major industries, healthcare, finance, logistics, and manufacturing, actively integrating AI into their operations. And the companies that provide the tools to bridge the gap between AI models and real-world execution are going to be the ones that dominate this next phase of AI adoption. But here's where things get tricky. While AI investment is booming, not every company is going to come out as a winner. We're at a point where AI is shifting from the hype phase to the execution phase, and the companies that can't scale their technology and prove real business value are going to struggle. So the question is Palantir in a position to capitalize on this AI boom, or is there still too much uncertainty? That's where investors need to focus on two key factors: revenue growth and enterprise adoption speed. 1. Revenue growth. Investors don't just want to see that Palantir is signing new deals, They want to see whether those deals are actually translating into higher revenues and profitability. Right now, Palantir is already profitable, which puts it ahead of a lot of AI competitors that are still burning cash. But for them to move significantly higher, it needs to show accelerating revenue growth from its enterprise business, not just government contracts. Number 2, enterprise adoption speed. The AI industry is moving fast, and companies that can't scale quickly enough will get left behind. Palantir's ability to expand its AI adoption in commercial sectors will be the biggest factor in how the market values the company over the next 12 to 24 months. And this is where we circle back to the Databricks partnership, because this deal is a perfect example of Palantir trying to remove barriers to enterprise adoption. Now, the final piece of the puzzle is this. How do all of these partnerships and AI tailwinds impact Palantir's stock price? Because while all of this sounds promising, investors have to ask, is it enough to push Palantir to new highs? That's what we're going to break down next. Let's start with where the stock stands today. After a massive 300% rally in 2023, Palantir saw a 33% drop from its February peak, largely due to market volatility, economic uncertainty, and the broader tech sell-off. But since then, the stock has started to stabilize, and a lot of investors are wondering, is this the bottom, or is there still more downside ahead? From a technical standpoint, Palantir is at a key level right now. $85 to $87 is a critical support zone, and if the stock holds here, we could see a push back toward $100 in the short term. But if it breaks lower, there's a real possibility of a drop toward $66 before it finds solid ground again. But here's the thing. Technical levels aside, what really matters is whether Palantir can deliver results. Right now, Wall Street is divided. On one side, we have analysts like Loop Capital's Mark Schappel, who believe Palantir is heading toward $125, citing its strong AI positioning, growing enterprise business, and expanding profit margins. On the other hand, Jefferies analyst Brent Thill is warning that Palantir is still overvalued, arguing that the stock has already priced in too much AI optimism and still needs to prove itself with stronger revenue growth. So what's the deciding factor? It all comes down to execution. If Palantir can show that these new partnerships, especially the Databricks deal, are leading to real revenue acceleration, then the stock has a legitimate chance of retesting its highs and pushing past $125. But if growth slows, if AI adoption takes longer than expected, or if macroeconomic factors like interest rates and market uncertainty weigh down tech stocks, then Palantir could struggle to break out of this range. There's also the issue of insider selling, which we covered in the last video. CEO Alex Karp and other insiders have been aggressively selling shares, and while that doesn't necessarily mean trouble, it does make some investors hesitant to jump in at current levels. So, what's the bottom line? Palantir is at a critical moment in its evolution. It's no longer just a government AI contractor. It's making a serious move into the commercial AI space, and the partnerships it's signing right now could define its long-term success. If you believe in AI enterprise adoption and think Palantir's partnerships will translate into real revenue growth, then this could be a long-term winner, even if the stock sees some short-term volatility. But if the company fails to execute quickly enough, or if the market starts shifting away from high-growth AI plays, then Palantir could remain range-bound for a while. So now, I want to hear from you. Do you think Palantir's AI expansion is enough to push the stock higher, or do you think it still has more downside ahead? It's in the comments. If you got value from this breakdown, hit that like button so more people can see this. And if you haven't already, subscribe to the channel and turn on notifications so you don't miss the next update. Because if you think this was valuable, wait until you see what's coming next.